Hello guys and welcome to an Ethereum price prediction today, as well as some Ethereum news today. First of all, an Ethereum price prediction. Ethereum price lackluster action is resolving, adding clarity. Ethereum price had sketched an uneventful path, with a progressively narrow trading range. Still, the June 15th break of the symmetrical triangle's lower trend line has immediately exposed ETH to a bearish outcome in the days or weeks ahead. Critical to preventing a larger decline is the merger of the June 12 low of $2,259 with the 50% retracement of the 2020-2021 advance at $2,237. A daily close below will introduce Ethereum price to a more significant decline, likely to the confluence of the 200-day SMA at $1,849 with the anchored volume-weighted average price, anchored VWAP, at $1,830. Equating to an 18% decline from the current price. Speculators cannot overlook the potential for a sweep of the May 23 low of $1,728. It would take a daily close above the June 15 high of $2,640 to realistically entertain a sustainable thrust higher for Ethereum price. A close above the 50-day SMA at $2,919 would be welcome confirmation of a new, viable uptrend with ETH sights set on the all-time high of $4,384. A potential disruption for the bearish ETH outlook is the upcoming London hard fork update in July to address energy use and higher transaction fees. Excitement about the update may limit any further decline and place the foundation for Ethereum price to re-engage with the earlier rally attempt. Nevertheless, despite trading down 50% from the May 12 high of $4,384, Ethereum price still is not attracting a solid bid. A reminder that ETH investors may need a considerably lower price to stimulate a new wave of commitment and emotion. Now, let's take a look at the Ethereum daily analysis. Ethereum slid by 5.85% on Friday. Reversing a 0.21% gain from Thursday, Ethereum ended the day at $2,234.47. A mixed start to the day saw Ethereum rise to an early morning intraday high $2,377.80 before hitting reverse. Falling short of the first major resistance level at $2,453, Ethereum slid to a late afternoon intraday low $2,125.12. Ethereum fell through the first major support level at $2,300 and the second major support level at $2,227. Steering clear of sub-$2,100 support levels, Ethereum broke back through the second major support level at $2,227 late in the day. At the time of writing, Ethereum was up by 0.61% to $2,248.10. A mixed start to the day saw Ethereum fall to an early morning low $2,223.83 before rising to a high $2,248.61. Ethereum left the major support and resistance levels untested early on. For the day ahead, Ethereum would need to avoid a fallback through the $2,246 pivot to bring the first major resistance level at $2,367 into play. Support from the broader market would be needed, however, for Ethereum to break back through to $2,300 levels. Barring an extended crypto rally, the first major resistance level and Friday's high $2,377.80 would likely cap any upside. In the event of a broad-based crypto rally, Ethereum could test the second major resistance level at $2,499. A fallback through the $2,246 pivot would bring the first major support level at $2,114 into play. Barring another extended sell-off, however, Ethereum should steer clear of sub-$2,000 levels. The second major support level sits at $1,993. Now, to the Ethereum news today. 3 reasons why Ethereum may underperform Bitcoin in the short term. Ether could take longer than 12 months to regain ground versus Bitcoin due to increased uncertainty surrounding the shift to ETH 2.0 and reservations from institutional investors. ETH price outperformed Bitcoin, BTC, by 173% from March 28 to May 15. The incredible bull caused the token to reach a $4,380 all-time high. However, as cryptocurrency markets initiated a sharp drop on May 12, the trend started to reverse, and since then, Ether has underperformed by 25%. Some might say it is a technical adjustment after a strong rally. While this partially explains the move, It excludes some critical factors, including the fast advance of smart contract network competitors and Bitcoin being adopted as an official currency for the first time. Remember how the ETH-BTC ratio rallied again on June 8, reaching 0.77 despite Ether's price remaining 36% below its all-time high and ranging near $2,800. To understand what could have been driving the ratio, analysts need to analyze Ether and Bitcoin price drivers separately. Mike Novogratz may have been misinterpreted in his interview. Ether's bull run potentially got an extra leg due to intense praise from institutional investors. Traders could have picked up a sense of urgency, known as FOMO, and promptly shifted their Bitcoin exposure towards the leading altcoin. On May 13, New Yorker magazine published an interview with Mike Novogratz, the founder and CEO of Galaxy Digital. In the conversation, Novogratz said, "All of a sudden, you have decentralized finance and NFTs both on Ethereum at the same time roughly, with wild accelerating growth." Novogratz was then questioned on how much higher Ether could reach, to which he answered, "You know, it's dangerous to give predictions on the highs. But could it get to $5,000? Of course it could." While an Ethereum holder might have interpreted it as a prediction, others could have understood it as a wild guess, likely depending on general crypto market conditions. However, roughly a week later, a report from Goldman Sachs revealed the global investment bank believed that Ether had a high chance of overtaking Bitcoin as a dominant store of value. Interestingly, one of the main quotes in the report was directly from Novogratz's interview with The New Yorker. At its peak, Binance Chain controlled 40% of DEX volume while Ethereum has kept its 80% dominance on net value locked in decentralized finance, DeFi, applications. Binance Smart Chain, BSC, has reached a 40% market share on DEX exchanges. The successful growth of the DeFi industry and non-fungible token, NFT, markets caused intense congestion on the Ethereum network, raising median fees to $37 in mid-May. That bottleneck triggered an activity exodus to competing networks, and PancakeSwap was best positioned to capture that flow. To make things worse, important DeFi projects expanded to Binance Smart Chain, including yield aggregator Harvest Finance and decentralized exchange aggregator 1inch. Investors quickly realized that the trend could continue as the competing smart contract network provided an easy solution for dApps looking for cheaper alternatives. No country is adopting the Ethereum standard. Bitcoin might have had a subpar performance over the past 30 days because it has failed to break the $42,000 resistance multiple times. However, a major milestone was achieved when El Salvador became the first country to make Bitcoin legal tender on June 12. After the Central American country made the decision law, a handful of other Central and South American countries began discussing the advantages of taking a similar path. Ethereum is undertaking a redesign that will change the issuing rate and how entities get paid to secure the network by moving away from the proof-of-work model. Meanwhile, Bitcoin is making sure that every upgrade is backward compatible and maintaining its strict monetary policy. That is the main reason why Ether will not outperform Bitcoin over the next 12 months, or at least until there's a better understanding of how Ethereum network dominance of smart contracts will be. Professional investors avoid uncertainties at all costs, and cryptocurrency markets already present plenty of that. There's just no reason for institutional investors to ignore the risks while competing networks eat Ethereum's lunch. Thanks for watching the Ethereum price prediction and Ethereum news here today.